Hey everybody, Chuck Barone here. Wednesday, February 1st, 2023, man. The time is just blazing by. Holy crap, man. It just seems like it was just a week ago was Christmas. January is almost over with. What a wild month in these markets, right, guys? Big day today. Lots of stuff to talk about. Fed day today. Fed, yay, St. Jerome. This market was a wild one today. We'll talk about it a little bit. Before we start the show, though, as always, I want to thank everybody for their support. Make sure you guys understand how much you mean to us, the things you do every day for the show, watching the videos, your likes, your questions and comments, everything you guys do every day. It means the world to us, guys. We appreciate it. Markets today, well, the stock market started the day down, rallied up at the end. The market, there's so much uncertainty, okay? So today we know is the Federal Reserve Day. So the Fed comes out today, and as we pretty much knew we were going to get this quarter point increase. We got it. We pretty much know we're going to get another quarter next month in March when they meet. We're going to get, and Powell talked about that today during his presser. So we know we're at 4.60 now. We know we got another quarter coming next month. We'll see where the data leads. The Fed is talking about, now they might be able to actually do this pause that everybody's talking about. I really believe there'll be another increase. I really believe the Fed's going to get this rate over 5, if nothing else for the symbolic value of getting the rate over 5. The economy, there's so much mixed up. I can't wait to talk about this with you guys today. But getting back to the stock market, so the market's trying to digest all this data. You got the inflation numbers and rate increases and, economic data coming in very negatively. At the same time, you got a lot of positive data, earnings coming in pretty good for most companies. A lot of companies beating expectations on Wall Street, jobs and employment sizzling along, people making money, more money while inflation's coming down a little bit. So, you have all this mixed signals. The market's kind of just trying to figure things out. I think that, you have the stock market always wants to rally. So I think if the market finds a reason to rally, it will. Bond market today, well, prices up, yields down pretty good today. Bond market rallying, anticipating now this pause and maybe the end of Fed rate increases. So now we have the 10-year today dropping 13 basis points down to 3.40%. The 2-year dropping 11 basis points down to 4.09%. So you have the inversion narrowing a little bit. We're down to 69 basis points from almost 100 a little bit ago. Bond market rallying up. I'm not so sure this is going to really hold up. And the bond market's already been pricing in exactly what they think the Fed's going to do. Pretty hard to nail that one 100%, although in being honest here, the Fed has telegraphed every single move they've made. They've kind of, put it out there for the market to digest before they made the move. They haven't given us really any surprises. It's just the market does not, the market wants 0% interest rates forever. So the market wants to resist the message, even though the Fed seems to be apparently doing the right thing if these inflation numbers are to be believed. The dollar today, boom, down a full point almost today, down 9.92 points on the index, 101.13. The dollar had a nice rally yesterday last couple of days actually, back up over 102. Now basically giving that all back. As a result of the dollar tanking down though, markets rally. Gold up $22.60. A great day for gold. $1,951.70 per ounce. Silver up 25 cents today. $24.06. Back up over 24. I really believe we're going to see 2,000 gold and 25 silver any second, guys. I think that's now in my brain. It's a certainty. Oil down today, which is surprising, really. I guess there are really some big fears on demand for oil. Oil, West Texas Intermediate down $2.02, $76.85 per barrel. Hey, knock it all the way down to $30. I'll take $2.50 a gallon gas all day long. Bitcoin and especially going back to oil for a half a second, the oil producers, Chevron, Exxon, and all the ones that have reported earnings, smashed earnings records last year. Chevron made $35 billion in one quarter. Exxon reported fourth quarter that was just outrageous. These companies, now, is that legit profit or is that a little bit of greedflation? A little bit of taking advantage of the public when you can? I don't know. I guess it depends on your way you see things as far as what's a legitimate profit for a company. But interesting to see now a lot of those gains being given back on oil. I think that oil probably got a little ways down to go with, the winter season now. We're into February. Everybody's already starting to think about spring flowers, and we'll see where oil goes. I think that China's obviously the big X factor in all this, but I don't think they're going to be as big a factor on the global markets as a lot of people do, because China, let's face it, man, they're buying their oil from Russia. They don't give a crap about the world's opinion or sanctions or whatever it is. They're going to get their oil cheap if they can get it, and they're doing it. Bitcoin today, down to Bitcoin. A nice day for Bitcoin. Another rally up $573, $23,683. I think you could see Bitcoin 25 pretty easily coming up here. It just seems the rally's rolling on. It was down as low as around 16,000, now moving up toward 24,000. That's a pretty big rally in a short period of time. Bitcoin rocking on, man. I'm glad for the people that watch this show that are holding Bitcoin and cryptos. You guys are getting a little bit of relief. News you guys need today. Well, we all know today was Federal Reserve Day. We know we anticipated and have been talking with pretty much 100% certainty we were going to get this quarter point today, which we did get. The interesting thing and what weighed on the markets today, though, was Powell's comments after. Powell talked about ongoing rate hikes. He talked about would be needing substantially more evidence that that inflation is down before they would even ever consider lowering rates. I think they really wanted to rain on the market's parade, thinking that rate cuts sometime this year were going to happen. I don't really believe they are, unless there's a real catastrophe in the economy. We'll see. Powell's additional comments, he said that the economy is growing modestly, but the economy is still growing. Employment is still strong. This is a big factor that weighs on the Fed's decisions. That's one of the main reasons I'm believing that the Fed will give us that additional quarter point increase that the market isn't anticipating. So tomorrow we'll be having a little more in-depth report on the Fed, because we're going to read that policy paper. I haven't had a chance to get into all of that yet today, but that's where the real news is going to be. We'll see exactly what the Fed's up to, what their real beliefs are on the economy, what some of the discussions were like. Was this rate increase a unanimous one? Was there any dissent? If so, why? A lot of fascinating information we'll be talking about on tomorrow's show about Fed Day today. Today we got some information. The ISM index comes out. Manufacturing continuing to fall. ISM drops to 47.4 from 48.4. Analysts were expecting 48.0. Not a good number. Manufacturing continuing to contract in this country. Actually now below 50, a recessionary number. Manufacturing in recession, according to the ISM, 47.4. Not great news for manufacturing. Mortgage applications falling 9% last week, even with rates coming down around 6.25-ish, 6.15, somewhere in that neighborhood. Collapse for housing continuing. You cannot have high rates and high prices in real estate, especially the prices we're talking about here in the $400s of thousands of dollars. Okay? The numbers don't make sense. I've been saying it on this show for months and months and months. One of two things has got to happen. Either rates have to come down to support these prices, or prices have to come down to support the rate. Those are the only two scenarios other than neither happens and you get a complete collapse of real estate. So I think what's been happening is prices have been coming down. In Vegas, the median was at a peak of 482. Now all of a sudden this month, well in December, January, prices rising again. What in the hell, guys? So again, more mixed signals in this market, just stupid. But as a mortgage guy here in Las Vegas, I can tell you with certainty from my own personal experience, real estate is just dead in the water right now. There's still some transactions happening. You still got investors in the market. But for the regular schmuckatellis, Joe Sixpack out there, the regular working class guy, especially first-time home buyers, completely frozen out of the market. And lastly today, to wrap things up, really interesting, I've been talking on the show about the conflicting data we've been getting and how it just makes it impossible to really figure out what in the hell the future is going to hold for this stock market. We all want to look into our crystal ball, kind of get an idea of what the future holds. I'm really reluctant to always be predicting that kind of stuff because, let's face it, I'm not Prescott. I don't have a crystal ball. I'm going to be wrong a lot of times, and people watching these shows are not a big fan of being wrong all the time. So when I say I really believe something's going to happen, it's probably likely going to because the evidence is just going to be pretty massive. I think that I've tried to handle this show, and especially in these times, more like talking to your rich uncle or your broker than an entertainer like some of these other guys in the field, especially my buddy Greg. He's a brilliant guy, smart as hell, but, when I watch Greg's show, it's the entertainment that keeps me there. He's funny, man. So, it's just a contrast, but we've been really trying to keep you guys up to date and give you an idea of what we believe is going to happen. Check out this conflict. Okay, so now you got the big battle today between what the Labor Department says for job openings and what ADP reports for jobs. Okay, so check this out. The Labor Department comes out today and reports that there are 11 million job openings in the United States. 1.9 jobs for every person looking for a job. The number of openings was up 572,000 in just the last month. Okay? So when you see the media reporting, Google's going to lay off 2,000 and this company's going to lay off 10% of their workforce, which is, 300 guys or whatever, look at it like this. 572,000 job openings in the last month. 4.5 million jobs created in 2022 in a year that most of us felt were like a big recession year. So just crazy data. So, okay, the jobs are there. Now here comes ADP. They report that last month, 106,000 jobs got filled. That's it. Hiring. So there's a ton of openings, but nobody's really hiring apparently. It's just the weirdest thing. Now ADP hasn't always been super accurate, right, with their estimates. But there you have it. So you have 1.9 job openings for every job seeker. You got 11 million job openings. You got the amount of job openings going up like crazy, 572,000 in the last month. And at the same time, you have ADP telling us that companies aren't really hiring. 106,000 is a pretty poor number. So which is it? Which is it? Now we'll find out Friday. Because Friday the Labor Department will release their numbers and we'll have an idea then of what the real hiring looked like, a new unemployment rate, and all kind of interesting stuff. So we'll get a real clear picture on Friday of where we're at with jobs. Anyway, guys, that's it for today. We appreciate your support. We'll be back up tomorrow to talk about this Fed policy papers, all kind of additional data coming tomorrow, plus earnings. It should be a pretty interesting day on the market, like they all are. But we'll be back to give you guys what you need then. As always, if you like what you're hearing, hit like, ask your questions in the comments, share the videos with your friends. We appreciate your support as always. We'll be back tomorrow. Until then, guys, Take care. Thanks.